Welcome to Economic Solutions. I'm Leonard Zane. I'm joined here today by Rafi Santour. Rafi, you have been in banking for something over 20 years, and now you are a financial planner with Ameriprise, even though you do not represent them today, right? You're on your own.
Not today, I'm on my own.
Okay. Today we have a fascinating program about how to pay for government, novel ways of paying for government. I think we're all very familiar with the standard ways the government is paid for, and we all feel the pressure of taxes and financial drains and so on. But in this program, we're going to look at some other ways of funding government that may be actually less painful than the ones we have today. So beginning, the first question to ask is, what does government do that is worth paying for? That's a basic question, but I think it's one we all need to ask.
Right.
So Rafi and I have broken this down into just two simple things that government does. It provides protection and it provides empowerment. Now, protection everybody's very familiar with, the military, the police, fire departments, protects our rights, it has laws, it protects our freedoms, provides the court system. And what about empowerment? Well, government is charged with providing a livable environment, number one, that provides clean water, utilities, clean food, sanitation, transportation, byways, education, which Thomas Jefferson said was really the charge of government, to provide education for all, health standards, protection, and health aid. And also services such as libraries, community services, and administration. So when you look at government, it does those two things of providing both protection and empowerment. Okay, how do we pay for all this? Well, we can look at the ways that it's being done now, or traditionally the way it's been done. First, taxes, as everybody knows all too well. Secondly, service fees based on use. For example, the post office, or when you go to the Department of Motor Vehicles to register your car.
Both local and at the state, federal level, yeah, you get that all the way across.
Which means, in some cases, like if you drive a car only on a farm, you don't have to pay that fee. You're only required if you're using common roads with everybody else. Then a third way that's actually notorious that we've covered here in previous programs is new money creation and borrowing and deficit spending. We argued in our very first program that it was the Federal Reserve that precipitated in large part the Great Depression of the 1930s by stimulating the money supply to the degree of 62% increase in the 1920s, which was unprecedented in America. It also raised the money supply by hundreds of percent since the late 1980s, and many argue that that is one of the reasons that we had this inflationary bubble that burst in the crisis we have now. Yeah. In addition, Rafi, I guess, to the conduct that people exercised, right?
That's a whole episode in itself, I think. You know, just definitely, I think people, but it ties into the money supply, because when things become easy, they become easy across the board. And whether you're talking about regulation and the opportunistic approach of certain individuals in the financial industry, or you're talking about the ease of money supply, I think the consequences are similar sometimes.
So we have people that can exploit that, and that certainly happened in the crisis we're facing now. Then we have U.S. federal, state, local government spending today. This is an important number to look at. Just how much of the gross domestic product is spent by all government in the United States today, and it's about 39% of the gross domestic product. The gross domestic product is about $13 trillion. And we compare that with Europe, which is currently spending an average of 46%. So we're a little less than what they do.
I think if you probably asked people, you'd get a wide variety of answers. People might say it's too much, and some people might say it's not enough. But for purposes of what we're illustrating, I mean, that really doesn't matter what the policy of it is. It's just the fact that there is a lot that is done, and it's got to be paid for somehow.
Right. And so that leads us to this question: how can government be paid for while minimizing borrowing and citizens' pain. You know, we recognize we need government for certain things, but how can we pay for it and keep the pain and the pressure to the minimum? I think that's what we're all striving to do. That's what this program is about. So, Rafi.
Well, I think before we talk about how we're going to pay for it, I think we have to think about, well, if we're not, in absence of raising taxes, in absence of borrowing money, in absence of producing money, something has to give. And if there is no alternative, then I think it's got to be, the obvious answer becomes reduction in spending. And once again, I think you get people on all sides of this saying, well, yeah, this is extra and that's extra. But at the end of the day, I think we all have to ask ourselves, what are we willing to give up? What are we willing to reduce in our need from government in order to have the savings that it needs to have? Which obviously, if government provides protection and empowerment, then less government provides less protection and less empowerment. And maybe while all of us could agree we still need a national army, there's a whole bunch of other stuff that I think are much more ambiguous, and everyone's got their opinion about it. So we have to be careful in how much of the solution comes in reduction in spending. And that in itself could have novel concepts. But just as an example, I think we were talking about this, the city of Monrovia in 2008 had a budget of government spending of approximately $60 million.
61, I think.
61 million, yeah. And so if you look at a reduction in government spending there of just 5%, that would be over $3 million. So then the people of Monrovia need to ask that question, what are we willing to give up to save $3 million if government had to do that?
Okay, and we're going to propose a brand new approach here to raise money for government. And this particular first method, we're going to come up with about 3 methods that we're going to present here today. The first one is what we call graduated flat taxes. Now, Steve Forbes is well known for presenting his approach to what he calls flat tax rate, and that's simply a tax rate that is a standard kind of rate on the gross income that is made by either businesses or individuals, and it's just this flat tax over that group with a standard rate. But we're going to propose graduated gross tax rates based on a couple things. But first, let's take a look at what's happening in our tax structure today. 57% of corporations doing business in the United States today pay 0 income taxes.
That's mind-boggling.
It's mind-boggling.
Yeah.
Here's, I represented a loophole here. This is my rendering of a loophole coming out of the tunnel into the bay. So here's, in effect, most corporations are paying nothing. And we think something needs to be done about that. Secondly, as we look at how this might be done, you can classify businesses according to the standard industrial classification codes. There are, I don't know how many hundreds of these codes and subcodes that will classify the type of operation any kind of commercial company or institution is engaged in. And you can actually look at historical profit rates that those segments of industry happen to make. And therefore, you can set up tax rates that are based on, all right, if it's a market chain, they're known often for having very low gross profit rates. Of course. So you would have a low tax rate for that kind of industry. On the other hand, if you're talking about oil companies, you may have something quite different.
Absolutely.
Now, all this, and it's going to come up later in our program, Rafi, I know you're going to talk about it. All this is hugely political and has to be gone through in Congress. There's just no way out of that. The negotiating and haggling has to happen. Yeah. But anyway, the first thing would be classification by standard industrial classification codes, and then selection of gross tax rates based on those codes. Now, the advantage of that would be that every business or taxable institution would know in advance pretty closely what they're going to have to pay. They can therefore do their financial planning, their economic calculations with all that already programmed in. You talk to any company in business, even the smallest company, they will tell you what they expect to gross in income in sales next year. Yeah. So you factor the tax rate in, and that's it. It's a certain tax rate for that industry, for that size of business, that gets applied to their gross system. And it is graduated because the tax rate, the gross rate, varies according to the industrial classification code. Okay, what about individuals? Well, the same thing, but in this case, it would be a range of gross tax rates based on a person's gross income. So if you make $10,000 a year, you're not going to pay taxes. Yeah. If you make $500,000 a year, you're going to pay sizable tax rates. And so that's the strategy of the graduated flat tax approach.
But this is where you're talking about no more marginal effective. We're talking about on the gross, and that way it eliminates a lot of the other complications that currently we all go through every time we file our taxes.
Think of what that eliminates in terms of deductions. Yeah. I mean, we all use deductions, and sometimes wage earners use just standard deductions, or we may have a lot of write-offs. If I have a lot of real estate, I'll have a tremendous amount of depreciation. I'll have interest costs. If I'm an oil company, I've got depletion allowances. This really lowers my tax exposure.
We might even reduce the IRS's expense, huh?
Well, the IRS, as people might imagine, would become much smaller under this approach. Now let's look at what would be the effect of a graduated gross income tax, graduated flat tax. If we say that about, let's say 5 to 10% tax rates would be an average tax rates on the gross against those 57% of the corporations that are paying no taxes. Now, by the way, right now, that 57% grosses $2.5 trillion in sales that they're paying zero on. So if we say 5 to 10% tax rate, we can raise from $75 billion to $250 billion of increased revenue for running government. I mean, that's an enormous...
On the high end, that's about 5% of the total...
Of GDP.
Of the government's...
the government's, that's right. Yeah, right. Okay, how about wealthy households? The Census Bureau looks at very wealthy people. And we're going to get into a little later in this program why it's in the interest of wealthy people to go with what we're proposing here, not just for people who are middle income or low income. There are about 130,500 households, according to the census, that gross $4.9 million on the average per year. That's about 1/10 of 1% of the population. And that's nearly $640 billion of gross income that these people make. And if we said they were going to pay a 10% flat tax rate on that, well, that's $64 billion right off the top, without write-offs that they would normally exercise. These people usually have tremendous properties and holdings that give them enormous write-offs. So that, and I guess you're going to talk a little bit more about what their taxes
what it looks like, actually. Right? It looks like, absolutely.
Okay.
I think,
yes,
this is kind of right here. It's interesting consideration, because we hear a lot of talk out there about the wealthy pay a much bigger chunk of the taxes in this country. Well, there's a couple of ways you could look at that. One is, what percentage of the total taxes that are being collected are being paid by wealthy, whatever definition we want to give, versus what percentage of the wealthy people's income is going towards taxes. And I think you have to put it in comparison with everybody else. The numbers here actually even get even more micro with the top 400 taxpayers, and this is off of 2005 numbers, I believe. The top 400 taxpayers pay on average about 27% of their income in taxes. Now, they may account for 25% of the total taxes collected in this country, which is a huge number. But it's but it's 27% of their income, whereas the rest of us, every other taxpayer, if you put them together, we pay approximately 40% of our income in taxes. Now that's at the federal, state, and local levels, you know, with all the fees and everything that you put in there. So 40% of our income goes towards taxes, while the very, very wealthy pay about 27%. So there does seem to be a little inconsistency in that.
So I have a question for you, Rafi. All right. So therefore, if the very, very wealthy are paying anywhere from 1/4 to 30% of all taxes, but that means everybody else is paying 70% of all taxes, and yet they're paying not quite double, but they're paying 40% of their income on the average, whereas the very wealthy are paying 27% of the income.
And then we'll see a little bit later, there is a percentage of the population that isn't paying taxes at all, and we're going to have to address that issue as well. But there is a chunk of the population that is in between the very wealthy and the ones that aren't making money at all, which we refer to as the middle class, that seems to, if the numbers are, if we interpret the numbers the way we are, carry the burden of the tax.
Right, right. They're carrying the burden. All right. Here's another approach of raising money. So we've covered the graduated flat tax. We've also covered who's paying the taxes now and exactly what is the impact on a person's budget from taxes. And we can see there's a huge impact with middle class families, you might say, and not so much of an impact on the very wealthy, even though they're paying a big chunk of the tax revenue. Another way to raise money. There is currently a ceiling on Social Security wages. People who work for salaries and wages have a wage cap against which Social Security or FICA wages are taken out. And that cap was something like $103,000, $104,000. I think it's gone up in the last year. So if you make more than, let's say, $104,000 or so, at that point, you're not going to have any Social Security taxes taken out of any salary you make beyond that.
Yeah.
And the current rate is 12.4% of FICA taken out of these wages. And so what we're proposing on this show is saying, well, you know what? We want to lower that tax rate. Let's lower that tax rate by 1%. Actually, what? How many basis points is that?
10 basis points.
10 basis, 100 basis points. We want to lower it by 100 basis points. Lower the tax rate for everybody, but take the wage cap off. If we do that for Social Security revenues, and we know how much the federal government has committed to, and the plans they have, and the projections that are made about, is Social Security going to be solvent? How is it going to make it? What happens if health care is increased via Social Security? Well, look at this. Here is the revenue that is currently made against the FICA with the 12% tax rate. And now, if we take that cap off, we can raise $73 billion a year more in Social Security tax revenues. And again, is that going to be painful? Rafi, what do you think?
Well, it's a tough question, because you look at someone who makes 80, 90, 70, 50,000, whatever you want to call it, as long as it's under the cap, and they're paying the full their participation in Social Security tax, whereas someone who's making twice, 3 times, 4 times, $10 million a year, they're only getting in a very minuscule portion of their income taxed at Social Security taxes. So the logic was that because Social Security benefits themselves are limited, they're not unlimited, that the taxation that goes into them should be limited as well. Now, there's probably, like we talked about earlier, Congress will have to hash a lot of these things out, and there may be a happy median somewhere along the way, but clearly any increase in the cap, elimination of it altogether, clearly generating a whole lot of money, but any increase in the cap can be sustained, I think, by most taxpayers.
Okay. Here is a third way to raise more money for government, and here, this is a very interesting thing. We talked about protection and empowerment, what government does. Now, one of the aspects of protection, or it could be considered empowerment as well, are fees for services the government provides that we currently take for granted. But we're going to propose on this program that maybe we shouldn't take these for granted. Maybe we should look at what is the value of what government provides and give us the choice of, do we want to fund those things or don't we? So one thing the government does that we take for granted, and it's part of protection, is protection of our legal rights against crime. So we have the court system and the enforcement system that protects for this. And we have civil situations where if we have contracts and somebody violates one of our contracts, we will go to court very often, unless we can do it in arbitration or mediation, but we'll go to court. And we expect the government to be there for us, at no additional charge anyway, and provide these services, a very valuable service. But what we're proposing today on this program is, what if we go to civic contract litigation fees and give people the choice, so that if you have a contract that is more than $5,000, $5,000 being right now typically a lower limit for small claims court, up to $7,500, I believe, with corporations. So it could be $5,000 or $7,500, up to a certain limit. The government will give you small claims protection and that kind of thing. But if you have a contract that's more than $5,000 or $7,500, and you want the government to cover that contract in case there should be litigation, you can actually take out stamps that could be sold by the post office and dated and stamped to your contract to assure that your contract is litigatable. Now, this is important because many times, Rafi, if you and I make a deal, we being, let's say, real pals, we trust each other a lot. If you and I have a dispute, we could have a $5 million contract and say, no, we're not buying those stamps. We will choose mediation or arbitration, and we'll go with that. We won't litigate, and that's the way it'll be.
So the system will not be available to us because we've chosen to opt out of it.
That's correct. It's our choice. And this is, again, what we're advocating in this program. Let's see if we can give the public a little more choice about what we're paying for the government provides that we may not want to have to pay for. So let's say that we are doing a huge merger between General Motors.
How timely.
It's going to be many billions of dollars. But we do want to have litigation protection on something like that. We're going to go and we're going to buy those dated stamps, and we're going to fund our contract for litigation protection for something like that. Or if we buy a house, I think we're going to want to do that. If we buy a car, I think we would do that, just like when we pay a registration and license fee with the state government. I think we're willing to do that.
And we're used to doing it. It's like you said, we're paying the DMV fees, we're paying, and even when we go to court for litigation, we pay for fees, we pay for court filing fees, and so on and so forth. So I think it makes it a much more even collection system, I think.
Right, and if I don't have much money, if I'm a moderate income person, I make $25,000, I don't have a lot of big contracts. So I'm not going to have to go out there and buy much of this. But if I am very wealthy and I'm engaging in, or even moderately so, engaging in some major contracts, I'm going to want that protection, and I should pay for it. It's a service the government provides, and we shouldn't just do it by taxes. We can do it by fees according to the people using it and according to the value that they actually insure for. So if we do a rough calculation of this, let's say that 35% of the gross domestic product of $13 trillion is litigatable contractual situations. So in those situations, if we said the fee was 2% for those contracts, that would be $91 billion additional revenue to fund government. $91 billion. And the worst it would be 1% for you and 1% for me. If there are more parties, the contract fee would be even less. So this we think, is a very painless way of doing something like this. It is graduated naturally according to the value of these contracts and according to people who can really afford these things, and isn't going to penalize. It's not going to be regressive against people who don't. And lo and behold, we actually go out in the marketplace, in effect, and prove how much is government worth.
Well, you know, the thing is, something's got to happen. You know, and these are different ideas. They're ideas that we should at least be talking about, that we should at least be approaching people and saying, you know, these are different ways of doing it, because some of the ways we have been doing it haven't been generating the necessary results.
I want viewers of this show to call into the station or let us know, or let your political representatives know, if you've got a better way or better ways than what we're proposing here, or if you want to stay with what's being done now, that's almost been cast in concrete, that I think we're showing in this program that may not be the most efficient and painless way to do it. We want to hear what your ideas are, because government needs to hear these things. We have a national government that's claiming that they're going to create major change. Well, here are some major changes. We've provided some justifications on why we think these changes are worthwhile, but if you've got something better, let's hear it.
There's a degree of personal responsibility that I think we all need to take in this. I mean, if you think about these changes that are being made, one of the most fundamental results that it would have is things such as deductions and credits would become, well, in the flat tax scenario, basically eliminated. And there's a reason to consider that. And this is, you know, almost, you know, you don't talk about such things because we all care about our deductions and they're very important, and that's true. But if you look at this slide over here that says 33% of the US taxpayers have zero or negative tax liability. A little while ago, we talked about corporations and 57% of them not paying any taxes. Well, seems like individuals are not that far behind. And this chart over here demonstrates the percentage of people that have a zero or negative filing status over the course of time, and going back all the way to 1950, I believe, on this chart. And you could see there have been a couple of instances in our history where that percentage has come down, where there's been, seems to be a greater contribution among more people. But we appear to be at all-time highs right now, with about a third of us somehow getting our tax returns down to zero or negative. And it's not just people that don't have any income. It's also wealthier individuals that take advantage of credits, and they take advantage of what the system allows them to by reducing their tax liability.
So we have 57% of corporations that are paying zero, and we have 32% of individuals who are paying zero.
I wonder how many of the corporation shareholders are part of the individuals.
They shouldn't be classified that way in this chart. I don't think they'll be classified that way.
So I mean, if you look at this, it's like credits is another example of this. I mean, and both deductions and credits definitely, one could argue, have a certain impact in the economy, and in their own right, they might be helpful to the economy. But we're at a point where we really need to, at the very least, evaluate what we're doing and consider the alternatives that we've discussed. And it's like, what kind of credits are we talking about? Are we talking about child credit, or are we talking about making a movie? You know, I mean, if local government gives you a credit for making a movie, or using your house for some purpose or another, you know, you have to weigh the two against each other.
So this is going back to a more traditional approach of actual credits against the tax, which we're saying with graduated flat would not be there.
Would not be there. And so it obviously has to be explored, because this is a political hotbed. I mean, you know, if we start talking about getting mortgage interest out of the tax code, I think, you know,
rebellion.
There might be a little. But the truth of the matter is, at the end of the day, as individuals, as taxpayers, what do we care about? What's the bottom line for us? How much of our income is actually going towards taxes? How much are we being left with to go out there and spend and save and better our lives? So I think, you know, if illustrated correctly and people see that benefit, then it's not quite the hotbed that we're talking about.
But it's either this approach with credits against a gross, or the gross graduated flat tax that doesn't give you credits. I think we're on a lot more secure ground with graduated flat. Once we get into this, politics get even worse, I believe.
And because politics changes constantly, priorities change constantly, and then how do you evaluate what the true benefit of a credit is, for example?
The strength of my lobby. Okay, now, we've been hinting a little earlier in the program that why would, if I'm very rich, if I'm making $5 million a year, if I'm one of those 1/10 of 1%, why should I go for this kind of thing? Am I being penalized because I'm being wealthy? Because I'm more productive? I'm creating more wealth for the country? Am I being punished for this wealth? Well, there's another way to look at this. And the way to look at this is self-interest, pure and simple and clear, not trying to be an altruistic benefactor of the country as such at all. But what do I get out of this?
Right.
If I'm going to pay more, I'm one of the 57% of the corporations, I'm one of those 32% of the individuals who aren't paying anything. What am I going to get by paying more or paying some kind of rate or a higher rate? Well, here is the key. And I'm going to kind of read this because I think this is a really important display. So all of us, wealthy and less wealthy alike, can live together in a nation that is happier, safer, healthier, smarter, more productive, more law-abiding, freer, peaceful, more harmonious. Now that's in everybody's self-interest if we can, through this funding method, help create a country that has all these attributes or maximizes these attributes. This is why it's selfish for me, as a guy making $5 million or more, to want to pay that rate. I'm not going to feel the pain like you in the middle class, but I'm going to have a better country to live in. And let's just take a look at the kind of problems we're talking about that could be aided in this. We're going to compare something called civic capitalism. And I want to really get this straight because a lot of people all over the world don't understand exactly what are we talking about. What is capitalism? Market capitalism. Well, that's the pure form. That's where you trade goods and services. You have a minimal or low civic involvement. The focus is on short-term profit maximization, we've found by experience, rather than long-range investments. And this is due to financial risks and uncertainties. If I am, again, if I were General Motors, who is now going to be Newco, I was looking at my quarterly returns and I was trying to maximize all those. I didn't think about investing much in electric cars. I didn't think much about fuel cells. That's the long run. I couldn't be bothered with that. I could be bothered, but only relatively less so. Then covering my short-term gains. Well, look where that got me. That made me bankrupt. This is what market capitalism can do to you if you have a very short-term outlook and you're not thinking about investment. And while we're at it, let's look at socialism. A lot of people don't really, I think, need to know what socialism is.
Well, they also assume that the only alternative
is one or the other, right. Actually, socialism, for everybody's information, was a word coined by Karl Marx, and it means government ownership of all property and all means of production. I mean, and then, Marx set it up as dictatorship so that the state took charge of all this, it owned all of this, and we all worked for the government. That's what socialism is. But there's something else. And we do this in America, and it's done all over the world. All over the world, and it's called civic capitalism. It's not market capitalism. It's nowhere near socialism. But what it is, it's pooling our economic resources through government to channel investments into the private sector, into private enterprise, for the benefit of all. Now, this is when you get into environment, energy. We want to benefit everybody. We stimulate and raise productivity of target economic and environmental and citizen empowering activities. And this includes environment, energy, health, sanitation, so on.
Education system.
This is what market capitalism doesn't really address. Market capitalism, I want to make a buck, I want to be most effective at that, and that's fine. It works well. But it cannot work by itself. We've just found that out by experience. We also found out by experience that socialism collapses. It fails. And we certainly saw that in the Soviet Union, because they never get to a lack of scarcity of goods and services, and so it just ends up being perpetual dictatorship.
Right.
So what government can do by channeling these resources for private sector use, for long-term things that our short-term market capitalism doesn't do, it's called supply-side investments for the private sector. This is supply-side economics. It's very important to get involved with this productivity and a longer-range benefit for the good of all, not just the majority, the good of everybody. So if I'm rich, if I'm not rich, if I'm middle class, wherever I am, I want this civic capitalism to work for everybody, not just for the group. And so that has to be proven. That Congress has to hassle that out.
Yeah.
And we focus on the long-range infrastructure. I think the Obama administration is trying to do that right now. Education, environment, health care, all of these things that tend to be longer range than the market immediately addresses. By the way, we saw earlier that Europe invests, government spends about 46% of the GDP, whereas we spend 39%. But for example, France, this came up in one of our earlier programs, France has a healthcare system where everybody's covered. It's a hybrid private-public system. Everybody's covered. They live longer than Americans, they live healthier than Americans, and the cost is half per person of what we pay.
Yeah.
So there are civic capitalistic approaches that do work in various places, and I think as multicultural Americans, as we're proud of being, of looking around at everything and trying to bring the best ideas, I think we can look at France and find out what are they doing that we'd like to learn from so that we can keep these costs down but provide for the good of all. So this is, again, government empowerment of people for the benefit of society as a whole, for the benefit of everybody. We support and team with private enterprise, and it's a sharp opposition to socialism. This is not at all socialism. Government doesn't own. No. In fact, government, unfortunately, thanks to the General Motors debacle, government has found itself owning 60% of GM, and they're going to try to divest that as soon as possible. It's
now
not
that might be another novel way to pay for government, is to have government-owned corporations.
Well, but we want them, the American way is no.
That's not the American way, no.
We want that out of there. The president has said they want to get out of that. They want to get out of, key day-to-day executive decisions and all that kind of stuff. And General Motors, they got, I think, $15 billion at first, then they got another $30 billion. Some people say we should have let them go down immediately, like what's happening now anyway, and we could have saved that money. But anyway, if you point it to socialism in the United States, the governmental takeover of General Motors is an example of socialism.
Which is exactly why the government needs to have the resources available to it to keep a longer-term, productive, prosperous economy going.
If government had empowered GM, you might say, in the electric vehicle campaign, and GM could have gone out throughout the world and sold these cars, then they never would have gone bankrupt, and the long range would have been handled. So by keeping that out, by keeping government civic capitalism out, we actually ended up with socialism. I mean, to a degree.
To a degree, and we do this, like if you take, for example, our agriculture industry, and the government's empowering of certain agriculture systems, or using the biofuel, for example. These are different ways that government does exactly what we're talking about, and creates the empowerment necessary, and along the way, a more sustainable productivity.
Right. So if we change our view and become more conscious of civic capitalism, it's always been there, but if we become more conscious of it and use it wisely, we should be able to avoid these catastrophes like happened to General Motors, and actually simultaneously make them more productive. And we found that actually in Japan with Toyota, who became the world's largest auto manufacturer. Here is an example to give some hard numbers to this. This is a chart that's gathered by the Information Technology and Information and Innovation Foundation. It focuses on 16 indicators by various countries of who's being the most innovative. And we also have a Business Week magazine. This is the June 15th, 2009 issue. And Rafi, you could read that.
Innovation Interrupted.
Innovation Interrupted. One of our problems with market capitalism has been that this short-term quarterly outlook that GM was really well known for, and the planned obsolescence that they also are well known for, this backfired. It caused failure and bankruptcy. Well, we have other countries and parts of the world here that are using civic capitalism a little more effectively, or much more effectively than we are. We are actually 6th place overall in the score of innovation in the United States. We used to be number 1, hands down, by many times over. We are led by Singapore, Sweden, Luxembourg, Denmark, and even South Korea. And then the change, the actual change in innovation increase, we're number 40 in that. So we're down here at a rating of 2.7, whereas China, number 1, is 19.5. I mean, even pick, Slovenia, 16.7, Russia, 15.2, the Czech Republic, 13.8, India, 13.6. We're way down there in the increase of innovation. So we know that we have been really remiss in our economy of not funding innovation, and now we're paying the price for it. Absolutely. We're no longer the world auto leader. We're no longer, China may actually overtake us in a year or two on GDP. They're within 1 trillion right now. Yeah. And so this is the cost of what we bear by not being innovative and by not channeling civic capitalism as these other countries do very well. Here's another one. Now, what do you get from all this? Fine, we're talking about economics. You'll notice in the previous slide, Denmark was one of the higher innovative countries. Very interesting, because Denmark is number 1 out of 178 countries studied. This was by a British sociological team. They're classified as the happiest country in the world. The United States ranks 23rd. Now,
not that far behind.
We're 23rd. Well, we used to be very proud of ourselves. Of this is the place to be. We're a great country. We're happy and so forth. We have more opportunity and so forth. Well, we also have 5 times the violent crime rate of Europe. We have the highest incarceration rate of 737 people in jail per 100,000. That's the highest in the world. We have Canada here at only 116 per 100,000, Japan 34. Wow. Now, we were talking earlier, why if I'm wealthy would I want to pay taxes? Or why should those 57% of corporations want to pay taxes? Why should the 32% of individuals want to pay taxes? Well, this is why. Look what socially is happening here. We have certain things that work very well. We have rights in America that work well. We have a constitution that works quite well when it's properly implemented. But we have some huge social problems because we're not, again, using civic capitalism intelligently to apply it. And another thing, this study found that the 3 highest factors, the 3 key factors for national happiness, number 1 was health. Wow. Yeah. And we're the country that has 47 million people without health insurance. Other countries, even though they're spending a higher percentage of GDP, France is doing it for half our cost. They're living longer and happier. They're proving that they're able to be healthier than we are. We actually have an infant mortality rate that is worse than Cuba's, by the way. Poverty level was the next aspect of not having poverty. We have a lot in America. And third was education. This is a big deal. These 3 things are, according to this study of 178 countries, the key to national happiness. So we're talking in this program how do we fund national happiness? How do we minimize pain financially and through helping government out to help us? How do we fund national happiness? So that's
how do we all benefit from it?
That's exactly.
Absolutely.
And these other countries are doing a lot better than we are. And America, I think, is honest enough to look at ourselves and say, where are we doing well? Where can we use improvement? Solution summary. Well, so the things we showed so far.
A lot of money out there.
There's a lot of money we could raise. From new tax revenues on graduated flat, we could raise $200 billion from businesses, $64 billion from households, new Social Security revenues, $73 billion, new contract litigation fees, $91 billion, total new revenues, $428 billion. We're pushing closer to $500 billion here of new revenues that our program is presenting for everybody's view and potential action. I mean, if you like what we're presenting, please let the powers that be know.
And that's year in and year out.
That's right. Year in and year out, we're coming up with $400+ billion of new revenue to fund government.
Absolutely.
We found a way to create more protection and more empowerment, to raise the level of our society, to make it happier and more successful. And we think this can be done by a combination of civic and market capitalism.
Now, and just to add on that, it's obviously when you have happier people, when you have more productive people, then that increases the production as a nation, which in its own right increases tax revenue and litigation fees and all that other stuff. So the 428 could be a starting point as to really how looking at novel ways of paying for government could really, truly impact revenues for the government.
Exactly, and for us, it would be
for
our
us,
benefit.
exactly.
Now let's look at Monrovia. What does this mean to Monrovia? You mentioned earlier that a 5% cut of budget in Monrovia was a loss of $3 million that could be used to provide that protection and empowerment. Well, through the program that we have added here, that we have proposed here, the three things that we're proposing, we can increase Monrovia's income. I mean, its income from just contract litigation fees alone. We can raise $11.2 million more for the city of Monrovia that people would find virtually painless. I mean, the rich people are going to do this, and it's not 1% a piece for a contract a litigation deal, or you can go arbitration or mediation if you don't want to do it. But still, 11.2, that is an 18.4% yearly increase of revenue for our city of Monrovia. So here we are here currently in the blue, and here we are here with the increased revenue. So these are some ideas that we believe are actually overdue at looking at. We have an opportunity now. The government is saying, oh my gosh, we have a crisis. What are we going to do? Well, here we are, a couple of citizens doing a show saying we think we have some ideas that should be seriously looked at and considered. And if you don't like these and you like what we have now instead or something else, we want to know the reason why.
Without action, though, we're going to default to exactly what we're doing. And, while some of us might be perfectly happy with that, it's clearly not a sustainable thing, and we're going to keep going through these bubbles that we keep going through, and then asking ourselves, why are we there?
Exactly.
And why is the government borrowing, and so on and so forth. So.
Okay, well, Rafi, I've been thrilled to have you on the show.
My pleasure.
You're very knowledgeable and insightful in all this. Is there anything else you would like to add or a closing statement?
No, just thank you very much for having me. It's my pleasure being here, and I hope our viewers will take action.
Well, again, I would like to thank our viewers. I hope you'll get something out of this program, as with the programs we've done to date. Thanks so much for joining us. We look for you again.